Thank you for joining another episode of Wealth Building Conference. Good morning, good afternoon, good evening, wherever you're listening to me. Welcome to another episode of Wealth Building Conference. Today is another day. We're going to be talking about medical professionals today on how to save money on taxes and build wealth, especially things that your accountant did not tell you, right? So, just before I proceed, I would just want to thank everyone for joining. I just want to tell you that the program is actually designed for everybody who is looking to build wealth. It's not only for medical professional, but if you are looking to build wealth and you are looking to pass it on, right? Because it is one thing to build wealth, it is also another thing to pass it on to the next generations unborn. So we're going to be talking about that today. I just want you to do something for me as you are joining. I want you to type your name and let me know where you're joining from. All right, it's going to be interactive sessions today. We're going to be talking about medical professionals on how or the strategies to build wealth and to retire early. I've met a lot of medical professionals, and one thing that baffles me most is that anytime you are talking to them, they probably tell you that I'm going to refer back to my accountant. I'm going to tell my accountant if this is actually good for me. Let me tell you this, right? Your accountant cannot build wealth for you, right? Your accountant is not your wealth builder. Accountant will only help you to prepare your books, to help you to make sure that you comply with all the tax regulations, especially when it comes to your profession, your corporation. But it is your duty, okay, to plan and build wealth for you. Your accountant cannot design strategies to retire in this country for you. And I'm talking to medical professionals, business owners across the world. Wherever you are listening to me, I want to let you know that your accountant cannot build wealth for you. I've worked with, I love what they do, but the reality is that in terms of wealth building, they don't really have experience in that. So you need to sit down with advisor who is experienced in your field, right? And I'm talking about strategic advisor that specializes in wealth building for medical professionals and business owners. I'm going to be talking about that today, right? So once again, welcome back. I want to appreciate everyone for joining. For those of you who have been following up every week, if you gain value, if this program is adding value to your life, to your business, I want you to type value in the comment section. If this program is adding value to your life, adding value to your business, because I also do program on Friday as well, where I will focus on insurance agents, mortgage agents, real estate, people that are on sales, to educate them on how best they can close high ticket client and also how to attract ideal client. Let me tell you this, for those of you who are in sales, your premium client is looking for you, but you're not visible. All right. So we're going to be looking at that every Friday. So, but today's program is actually designed for medical professionals, right? Just one goal. The reason for this is intentionally help business owners, medical professionals, entrepreneurs build wealth, right? With intention, right? So let me quickly pull up my slide and go into the presentation. Today, we're going to be talking about beyond numbers, 10 powerful wealth and retirement strategies your accountant won't tell you. This is for medical professionals, business owners, and entrepreneurs. So, let me tell you this, right? Today's program is going to be part one, all right, because it's 10 strategies. So I don't want to rush you guys. I want to make sure that I dissect every strategy that I'm going to be mentioning today for you. Then next week we're going to proceed to the remaining 5 strategies. So I'm going to be discussing just 5 strategies today. Pick your pen and let's study, right? Like I said, if you are getting values, I want you to type on the comment sections, I'm getting values. So, and if you know anybody who is interested in, learning on how to build wealth, or you know any medical professionals or business owners who is looking to build wealth, right? Please share this link with them. It's very, very important for them to learn. So, before we proceed, I would love to put this disclaimer to you, right? The presentation is for educational purpose only, okay? Not intended as personalized tax, legal, or financial advice. Strategies discussed may not apply to every situation, so consult a licensed professional before you implement any strategies. And figures, laws, and regulations are subject to change. Canada Revenue Agency CRA. So I am not a tax practitioner. I'm not here to give you advice on any of this. But if you really want to, because this is not for everyone, right? But before you implement any of this, please make sure you consult your professionals. Now, let's look at quickly introduction. Now, most accountants focus on compliance, filing taxes, record keeping. Uh, your accountant, right? Your job of your accountant is to make sure that he comply with all the tax law and prepare a robust bookkeeping for you to present it to either CRA or maybe other organizations that are looking to check your books of account, right? So, when it comes to uh, preparation of books of account, right? Balance sheet, cash flow statement, profit and loss, all these all these aspects of financial reporting require strategic compliance and adequate details to numbers. So for you to do this, you need your accountant to do this. Okay, it is not my job to do that for you. Your accountant can actually help you, but look at this. True wealth is built with strategic planning, not just tax return. If you focus on preparation of your books of account, right, and you make your books look good, what about your retirement? What about other aspects of your life, right? So true wealth is built with strategic planning, not just tax return. Of course, you need to file your tax and remit whatever you need to remit to CRA or your any whichever country you are listening to me, or any country of your jurisdiction. However, that is not the only way to build wealth. Wealthy Canadians, doctors, entrepreneurs, business owners use strategies beyond what accountants typically discuss. Now, your accountant cannot do more than what, he has a jurisdiction. So your accountant has a certain limit to which he can advise, right? So it is your duty to look for professionals like lawyers, like financial advisor, insurance broker, to guide you on other areas, real estate agent, to guide you on other areas of building wealth. Now, today, I'm going to discuss 10 powerful strategies that protect wealth. One, minimize taxes and accelerate retirement planning. Now, I'm going to repeat that. The strategies is one, okay, protect wealth. So there are so many strategies, but the question is, do you have strategies that protect your wealth, that minimize taxes and accelerate investment? Now, let's quickly go there. What are the pain points of business owners, medical professionals, and entrepreneurs? Number one, high tax burden. Okay, high taxes up to 53% in some provinces. If you agree with me, type I agree on the comment section. Now, if you don't know, let me tell you today that you might pay up to 53%, especially on passive income in some provinces across Canada. All right. This is, you can Google that. You can check your ChatGPT to know which provinces are you and how much tax you can actually pay if you don't, if you are not careful or you don't plan. Number two, retirement concerns. Retirement account often underfunded, right? So it is not about just getting the figures for me to retire, but how much do I really need to retire comfortably in whatever country you might find yourself, right? Now, this is it, right? Some people have seen it according to MD Financial, right? According to MD Financial, more than 40% of medical professionals run out of retirement funds. There is an income shortfall, right? They actually plan for retirement, but do they have enough money to support that? Right? Ask yourself, right? What type of lifestyles am I living right now? Do I have strategies in place to make sure that I have enough money to, to supplement my retirement, to sustain me till anytime, anytime life happen? So it is not about just plan for retirement. Sometimes I do talk, I know I have my own retirement plan in place, but this is the, let me ask you, is your retirement plan enough, right, for you to retire comfortably, right? Because if you don't do your calculation very well, chances is that you run out of funds. You run out of funds, right? Three, business inefficiency, profits not optimized. Now, when you have your corporation, right, your retained earnings, how do you actually invest your retained earnings, especially in terms of tax planning, right? Do you really make use of your retained earning to grow your retirement? Four, planning gaps, lack of succession and estate planning. Look, if you don't have an estate plan in place, let me give you this. Government has one for you, and it's always very expensive, right? It is not, see, a lot of us, a lot of medical professionals and business owners that I know, right? They have everything, but what about the estate planning? Okay, do you have strategies in place to make sure that what you have continue to pass on to other generations? Okay, if you don't have that in place, then you don't have adequate retirement plan in place, right? Estate planning, succession planning is very, very key when it comes to retirement planning. Okay, this first strategy, like I said, we're going to discuss 5 strategies today. 5 strategies. Everybody type 5 strategy. We're going to discuss 5 strategies today. Number one, strategy one, incorporations and professional corporations. So the reason why you need to incorporate your practice is this, right? And let me tell you this, right? You don't, some people will tell us, oh, I'm just on open work permit. I don't think I can incorporate my practice. Yes, you can actually incorporate your practice. The advantage is this: number one, lower tax rate. Shift income from personals to corporate tax rate between 12 to 15% versus 40 to 53%. If you agree, type and agree on the comment section. Let me tell you, the moment immediately you incorporate your practice, your tax bracket drop to 12 to 15%. The reality is that if you make any income in this country today or any part of the world whatsoever, you're going to pay tax. But the question is, where do you normally pay the tax? Where do you pay the tax? Do you prefer to pay 40 to 53% or you pay 12 to 15%? Because why? Once you make an income, right, you have to plan for the taxes. You're going to pay the tax. But do you now know how much exactly do you want to pay? That is the question. And that is the first advantage of incorporation. Number two, income splitting. Allow splitting with spouses, children, trust structure. So income splitting is a strategy whereby you transfer the liability from the lower tax from the higher tax bracket to lower tax bracket within the family, right? Say, for example, you and your spouse, you can do income splitting, and there are certain aspects of Canadian tax law or other tax law that support this. It's allowed. A lot of you don't know this. It's a powerful strategy for retirement planning and for tax planning. So you are using one stone to kill two birds. Number three, investment growth. Return profit to invest within corporation. I'm going to talk more about the retained earning as we proceed, right? The reason why you want to incorporate your practice is because when your corporation make money, right, whatever you make within a year, right, once you do your account, you prepare your books of account, your accountant help you to prepare your books of account, whatever profit you make, your income minus expenses minus uh minus tax, right? The profit after tax, profit before tax, so plus the tax you pay. The remaining balance, which is the retained earnings, is also subjected to tax. But if you don't have a corporation, right, it should not be easier for you to manage that. Let me repeat this, right? When your corporation make money, okay, whatever income you make within a year, let's say, for example, you make $500,000 and your expense is, let's say, $200,000. The $300,000 will be subjected to corporation tax, which is between 12 to 15%, depending on your province, right? The remaining profit, which is what we call retained earning, is taxed at a much higher bracket, with between 50 to 53%, depending on your corporation, depending on your province. So, and you need to plan for this. Strategy 2, holding companies and investment corporations. So now I'm going to talk more about the holding company now, which is the retained earning. Now, so once you have your incorporation, okay, you need to understand that your corporation can be subjected to litigations. Okay, one of the way to protect your corporation is to have a holding company. Okay, the holding company is that vehicle, is that that arms that will now help you to shield all the money you make from your corporation. By default, holding company does not really have any activities, but it will help you. Whatever money you make from your corporations can be actually invested through your holding company. Number one, why do you need holding company and investment corporation? About asset protection. Protect assets from creditors and lawsuit. Do you know that one civil lawsuit can actually make you to lose all you have worked hard for in your practice as a business owner, as a medical professional? Do you know that? Do you know that the creditors can actually go after those money? But when you move that money to a holding company, right, it actually, you shield it from litigations and creditors. Number two, family banks. Build family bank structures, which is Rockefeller models, right? So a lot of you don't know that you, as a medical professionals, you can also have your family bank. I am an expert in that area. If you want to know how that works, you can book a call with me after this presentation, right? Because why? It's just not about having the holding company, but we can actually create a strategies around which you can have your own bank and you can continue to pass it on. That bank can be used to, buy real estate, buy other businesses, invest on other, income generation assets that can also begin to create further income to the corporations and to the family, right? Tax efficiency. Use tax-free intercorporate dividends. So it is also a very powerful strategy to save on taxes, because whatever you invest outside your holding company has its own tax advantage, especially if you invest it rightly. Okay. Strategy 3. Everybody type strategy 3. Tax exempt insurance wealth transfer. A lot of times, right, I've seen that in many cases that, oh, Mr. Fasola, why do I have to get a life insurance, all right, as a wealth building tools or a retirement plan strategies or tax saving strategies? You can see tax exempt insurance wealth transfer. Now, it is something to have wealth. You can amass a lot of wealth, but if you don't have strategies in place to pass it on, right, you are still not financially free. Okay. And all over the world, life insurance is one of the powerful strategies that does not subjected to taxation, especially when you set it up correctly. Number one, tax shelter growth. Whole life stroke and universal life insurance is a powerful strategy that growth the growth is tax shelter. You don't pay tax on the growth, right? No. Number two, policy loans instead of taxable withdrawal. Now, the question now is, what I want to ask you is this, right? Which one is better? Do you want to pay 40 to 53% on taxes, or you want to pay interest of maybe 5%, 4% on policy loan? Which one is much more better? Which one make more sense? Type it in the comment section there, right? Because you don't really understand how these strategies work. Okay. If you have a life insurance, right, you take a policy loan, you probably pay between 5-6% on interest, depending on the company, depending on the carrier. Okay. If you want to learn more, you can book a call. But here is the thing, right? Tax-free inheritance, pass wealth, tax-free to the next generation via capital dividend account. Everybody type CDA. A capital dividend account is actually designed for corporations to, for tax planning purposes. Right? So we're breaking all these things down in order for you to understand that you have to explore all these strategies to make sure that you plan for at least have 5 strategies. I'm going to discuss 10 strategies. For an ideal medical professionals and business owner, at least you must have 5 in place. 5 in place to really plan for retirement. It's very important. And as I said, your accountant cannot do this for you. It is your responsibility to sit down with advisors that will help you, guide you on what to do that. Myself and my team, we have helped a lot of medical professionals in the past to make sure that we put strategies in place, not only to build wealth, but to pass it on. Because if you don't have a strategy to pass your wealth to the next generations, you don't build anything. Okay, now strategy 4, immediate financing arrangement, IFA. Now, this is also another strategy. It's a life insurance strategy. It's actually leverage on life insurance, but this is a more advanced strategies for business owners and medical professionals who want to build wealth. Now, corporate insurance purchase corporate owned insurance policy. So you must qualify for life insurance, be in good health. Your health status actually determine what you're going to get. Okay. Now, you collateral, use policy as a collateral for bank loans. So now, when you have these strategies in place, okay, the insurance company give you their money to do whatever you want to do, right? So the reason why many people don't want to go set up life insurance is, number one, they will not. Some of them feel that I don't have access to my money, so I don't have that patience to wait maybe 5, 6, 7 years before I can assess my cash value. I have good news for you today. With immediate financing arrangement, okay, you have access to liquidity that you can use to go into real estate, buy businesses, invest in other assets like REITs or ETFs, and all of that. Okay, so you can actually use this. 3, leverage, popular with physicians and high net worth entrepreneurs. Let me sound a note of warning here, right? This strategies is not for everybody, right? Only just very few Canadians qualify for this. So it is not for everyone. You need to qualify. I've seen a lot of medical professionals that want to have it, but they are not qualified. So if you want to know if you qualify for this, book a call with me, or you connect with me on Facebook, on LinkedIn, or YouTube, okay, or Instagram to know whether you qualify for this. 4, tax benefit, deductible loans, interest plus insurance loan. So here's the thing, right? If, for example, you have an immediate financing arrangement, and let's say, whatever you are paying as interest on that strategies, let's say, for example, in a year you pay $20,000, $10,000 as interest. Okay. Do you know that that interest is also a deductible expenses to your corporation, mean that you're still saving on taxes? Imagine you are paying very you're paying interest between maybe 5%, okay, as opposed to 40 to 53%. If you don't know why you need to have this, I'm just telling you the reason why you need to have this, right? You are paying interest between 30, you are paying interest of 5% as opposed to tax of 40 to 53%. You have to choose one, right? And you need to explore various strategies to save on taxes and to build wealth. Now, let me tell you this. Immediate financing arrangement create tax efficient leverage for wealth building. This is a powerful wealth building for you as a medical professional. The last one we're going to stop today. Strategy 5. Everybody tries strategy 5. Register retirement savings plan, tax-free savings account, and first home buyer savings account. So this is another very important strategies for you as a business owners and medical professionals. RRSP, reduce taxable income now. At least you have to know your contribution room so that CRA will not still penalize you. You need to know how much amount actually can I contribute into my RRSP. The benefit of this is that at least you enjoy the money now. You don't pay the tax now. It is a deferred tax strategies. There are 3 ways to pay taxes. It's either you pay now. Pay now means that if you invest on real estate, bond, stocks, you sell whatever profit you make on it, you pay taxes. Okay. Pay later is register retirement savings plan. Is a defer word strategy. So you defer the tax to a later date. Okay. It's a very powerful tool to plan for retirement. You don't pay tax at all. Example is life insurance. And as a medical professionals, you must implement those 3 strategies. Pay now, pay later, don't pay at all. Okay. TFSA, everybody type TFSA, tax-free growth and withdrawal. So these strategies it allows you to enjoy your money grow tax-free, and the withdrawal is also tax-free. The reason why this is tax-free growth and withdrawal is because whatever you are putting in your TFSA has already been taxed. A lot of people don't know, because it is TFSA. The reason why you don't pay tax on it is more like they don't want to subject you to double taxation. So what you are doing, right? The money you put here, whatever you put on your TFSA has already been taxed. So the growth and the withdrawal is not taxed. And the last one here for today is FHSA for first time home buyers. It's double dipping with RRSP transfer. So it's another powerful strategies to build wealth and to retire early in Canada. So I'm going to stop here today, okay? And next week we're going to continue the remaining 5 strategies, because I don't want to bore with a lot of information, so that we understand what we're talking about. So I just want to say thank you so much for everyone that has joined today. I know it's very, very impactful. Like, people, a lot of you don't want me to stop here, but I don't want to give so much information such that it will not be easy to comprehend. But if you get value, right, I want you to type value in the comment sections, wherever you are. If you are joining from Facebook, YouTube, IG, please put it on the comment section, values. And if you want to watch this again, you can go to YouTube. If you join later, or maybe you're having internet issues, or maybe you're on transit, you can go and watch this on YouTube, on Facebook, on LinkedIn. All right. On behalf of myself and my team, I also say thank you so much for joining today. It has been another fantastic, training today. Next week, I'm going to join you to share the remaining powerful strategies on how to retire early in Canada, and some of the things your accountant didn't tell you. Everybody type, your accountant didn't tell you this. Type it on the comment section. Because why? You're waiting for your accountant to show you how to build wealth. I'm sorry, your accountant cannot tell you how to build wealth. It is your responsibility to intentionally build wealth, right? Wealth is built with intention and with the right strategies. And not everybody understands the right strategies, right? But if you really, really want to build wealth, right? You need to work with the right advisors, put his right strategies in place for you to ensure that you have the right strategies. And again, please, very important, audit your strategies every year. Okay, if you have a strategies in place and you want me to audit it, I just free. I'm just doing this for free, right? I'm just going to give you free service, right? I'll help you to audit it, and if there's any things there that we need to improve upon or want to, amend or implement, okay, we can do that. Instead of you to fold your hands and say, oh, I'm going to figure it out. Some of you will say, I'll figure it out. Figure it out later. We mean that some of you don't do anything again. At the end of the day, we'll say, oh, had I known I would have done this when I'm this, had I known I would have do this. It's not supposed to be like that, right? So next week, we're going to share the remaining 5 powerful strategies. And of course, I'm going to summarize it so that you have at least what we have discussed so far. If you don't join this week, right, next week we're going to show you how the 10 strategies. I'm going to recap all the strategies I've discussed today. So like I said, I want to thank everyone for joining. See you next week again. My name is Oludare, your wealth building conference. See you next week. Bye for now.